The S&P 500 has plummeted by 2.64% today, reaching a staggering $7,384, a significant drop that has investors on edge. The current state of the market is one of heightened volatility, with the S&P 500 sitting at $7,384, down 2.64% on the day, and the VIX surging by 39.68% to 21.5. This indicates a significant increase in investor anxiety and uncertainty. Yields are also on the move, with the prospect of higher rates looming large. The Bitcoin price has dropped by 1.07% to $62,631, while gold has fallen by 0.73% to $4,334. This complex landscape is setting the stage for a potentially tumultuous period in the markets. In the midst of this turmoil, COO is standing out as a top performer, with its stock price surging by 8.58% to $67.34. This move is particularly notable given the current market environment, and it suggests that investors are finding value in COO's strong earnings track record, with the company having beaten expectations in all 4 of its last quarters. The last quarter surprise was a significant 9.3%, which has likely contributed to the bullish sentiment surrounding the stock. COO's peer group performance is also worth noting, as it is outperforming many of its peers. The analyst consensus is currently a hold, with 54.2% of analysts recommending a buy, and the options market is indicating a bullish trend, with a put-call ratio of 0.15. This suggests that institutional investors are positioning themselves for further gains. As we look ahead, the upcoming FOMC meeting on June 17th is likely to be a key catalyst for COO stock, and investors will be watching closely to see how the company responds to any changes in monetary policy. ABM is another stock that is catching attention, with its price rising by 6.67% to $42.54. This move is likely driven by the company's strong sector rotation, as well as its relatively low P/E ratio of 15.3x. ABM's earnings track record is not as strong as COO's, with only one of its last 4 quarters beating expectations, but the last quarter surprise was still a respectable 1.9%. The analyst consensus is currently a hold, with 50% of analysts recommending a buy. However, it's worth noting that insider sentiment is currently strong selling, with corporate insiders selling shares at a rate of -100. This could be a sign that insiders are taking profits, and it may be worth keeping a close eye on this trend. The options market is also indicating a bullish trend, with a put-call ratio of 0.47. As we look ahead, the upcoming FOMC meeting and CPI inflation report are likely to be key catalysts for ABM stock, and investors will be watching closely to see how the company responds to any changes in monetary policy. The cross-asset signals are also worth examining, as they can provide valuable insights into the overall market trend. Bitcoin's price drop of 1.07% to $62,631 suggests that investors are becoming increasingly risk-averse and are seeking safer havens for their assets. Gold's drop of 0.73% to $4,334 is also notable, as it suggests that investors are not yet seeking the traditional safe haven assets. The VIX's surge of 39.68% to 21.5 is a clear indication of increased market volatility, and it suggests that investors are becoming increasingly uncertain about the future. Oil prices are not directly mentioned, but the overall trend of risk aversion and increased volatility is likely to have a significant impact on the energy sector. As we look ahead to the next 5 trading sessions, there are several key events and trends that investors should be watching. The FOMC meeting on June 17th is likely to be a major catalyst for the markets, and investors should be prepared for potential changes in monetary policy. The CPI inflation report is also likely to be closely watched, as it will provide valuable insights into the current state of the economy. In terms of specific trades, investors may want to consider taking a long position in COO, given its strong earnings track record and bullish options market trends. ABM is also worth watching, although its insider selling trend is a cause for concern. Investors should also be keeping a close eye on the VIX, as it is likely to remain volatile in the coming sessions. Overall, the next 5 trading sessions are likely to be highly event-driven, and investors should be prepared for significant market movements. Thanks for watching, and we'll see you in the next video.